If you're thinking about investing in property in Dubai in 2026, well, you're probably looking at whether you should be investing off plan or in the ready market. And honestly, this is one of the most common questions that I get. Typically, if they are a first-time investor, then they don't fully understand the extent of the off plan and what it entails versus the ready. So let's chat through it today to make sure that you're going down the right path for your investments in 2026. So right now, off plan is very much dominating the market with around 70% of the transactions being done off plan. Why we see so many off plan transactions here in Dubai versus other areas such as the UK or potentially Europe, US, wherever it might be, is due to the population growth that we are having as an emirate. So over the last 10 years, we have increased the population by 55%, and nearly year on year it's been 5%. What this then means then, of course, is that we need more houses. So a lot of developers are launching projects off plan, which the supply is controlled by the government. All the approvals need to go through them before any projects launch, and essentially they own a lot of the land across Dubai, with many of the developers being government-backed developers. So we'll begin with off plan and discuss what the pros and cons are there and what sort of typical buyer is going down that route versus ready properties and what that looks like. Buying off plan will mean that you're purchasing the unit before it has completed. The typical benefits here are firstly the price. So the price tends to be under what is available in the market at that time that would be comparable. So let's say that it is off plan, you might see it at 1700 dirhams per square foot, whereas if the project was ready in the market today, then it might be 2000 dirhams per square foot. So that is one of the key indicators for value, but yes, they do tend to be under the value of what the comparable ready units would be. Flexible payment plans are what is making it most attractive for the off-plan investors. This allows them to be on payment plans where they may see, let's say, a 50-50 payment plan over 2 to 3 years. So that means 50% during construction, 50% on handover. Off plans are fully cash, so you're not using financing for this. Let's say, as an example, you buy a property at 2 million dirhams on a 50-50 payment plan. Over the 3 years, you have paid up this 50%, and now the property on handover is now worth 3 million dirhams. So you have only invested 50% of your capital, but made 100% return on your funds, as you have only put in 1 million dirhams and the property has increased 1 million dirhams. Whereas if you had put down 2 million full cash, no payment plan, and the property had then increased to 3 million, like the off plan, then your returns would only be 50% on your money there. So that is why many investors like it, because it allows them to leverage their funds very well without using the mortgage. As we mentioned, you tend to get the property under market value of what would be ready in the market today. So this tends to see a lot of appreciation on the unit. And also when you're buying off plan, it will likely be in an area that is up and coming and premature. So on handover, you will have seen a lot of capital appreciation if the area has added a lot of infrastructure to it, increasing the demand. What that means is off plan, more often than not, will largely outperform ready property when it comes to capital appreciation. But here's the reality with off plan. You're waiting for the project. Alongside this, when you're looking to purchase it, you're purchasing from a brochure. You've not got that guarantee of walking into the unit, seeing exactly what your view will be like, how the layout feels, and the quality of the materials used in the unit. While you're waiting on the unit, you are not getting any rental yield. Apartments across Dubai right now are at an average of around 7% rental yield, which means you're missing out on that year by year. So you could be looking at around 20% if it is on a 3-year payment plan for an off plan. So you're missing out on that rental yield, which is a large factor in why many people stay with ready property, as they like to see that rental yield coming in. Not only are you waiting, but the off plan does have the ability to hand over late. Many developers have it in their sales purchase agreement that they have the leeway to be 6 to 12 months late on the project for handover. So be sure that when you are buying, you understand how the developer typically hands over. Are they on time or are they late? As this will again eat into your returns if the project hands over a year later than planned. Many investors in the past who have bought off plan have done very well on capital appreciation, but this is not a guarantee. So despite the project potentially launch at a good price point, you need to be wary of supply coming to this area, as if the area is oversupplied, then your appreciation may slow down. To summarize this then, off-plan works better if you are looking for appreciation over a rental yield, as you won't have this for the time being during construction. To add to this, it is slightly higher risk but potentially a bigger reward, as the appreciation that some investors have made over the years has been very attractive. So everyone understands ready property, I'm sure, but let's compare to off-plan and why investors should potentially go down this route rather than off-plan. So as we mentioned there, unlike the off-plan, you can walk into the ready property, view the units, you can see how they have been renting, how they've been transacting, what other stock is in that area currently, what is potentially coming to the market, and how will this affect your building. You'll have instant cash flow, and while the off-plan is under construction, you can pick up 2 to 3 years of rental yield that could equate to around 15 to 20%. Ready properties in Dubai have still performed very well over the test of time. An area such as downtown, which is a pretty easy investment to make, you could say, as it's right by the Burj Khalifa in the center of Dubai. Well, downtown has appreciated around 40% and around 10% year on year for the last 4 years. So the appreciation levels are still there in Dubai, maybe not to the levels that you would see for an off-plan, but you will get that combination of appreciation with your rental yield. Ready property can be difficult at times to acquire the exact unit that you're looking for in the market, as it potentially is tenanted, the floor level that you're looking for may not be available, whereas off-plan, when you are picking your property, you'll have a range of different units that you can pick, especially if you're getting in early. So therefore it can take a little bit more time to acquire your ready unit, and why a lot of investors go off-plan is that they can pick exactly what they're looking for and have the price point there in front of them and go ahead right away. There is negotiation involved in ready property and contracts that need to be signed by both the seller and the buyer. To clarify, ready property makes more sense if you need that rental yield. You're looking to take slightly less risk by understanding exactly what property you're going into now and the numbers that come alongside it. And lastly, if you are looking for financing through the bank. So which one is better for 2026? Well, the honest answer is neither. It really does depend on your investment strategy, and both can work. Off-plan is more risk, but potentially higher capital appreciation seen for the units, whereas ready property is a little bit safer and you'll get that rental yield. What I would say is that the best investors tend to pick up both. They might have properties that they rent out and they'll use that yield to pay off the off-plan. So diversifying here can give you that opportunity to make a good level of capital appreciation on your off-plan, but also receiving that steady income from the rental yield. If you're considering investing either off-plan or ready, then feel free to contact me on the details provided below, and you can book in a call to discuss this further.